In this week's Robinhood breakdown, we're watching insiders cash out, a fresh analyst try to join the party, and a chart that seems determined to test how many red candles in a row you can look at before questioning your life choices. Welcome back to Fintech Spy, where we don't just trade the volatility. We zoom in on it, overanalyze it, draw 3 different fib levels, argue with ourselves about risk management, and then make fun of the whole thing. If you're new here, hit that subscribe button for more chaotic fintech breakdowns, terrible market analogies, and occasionally accurate memes. Let's hop right into Hood. Quick reminder, I am not a financial advisor. This is not financial advice. If you're making real trades based on a parody segment, you probably shouldn't be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. Kicking off our first new segment in these reviews, Analyst Updates, we actually did get one fresh voice on the Robinhood story. A new analyst stepped in and initiated coverage with a buy rating and a $145 price target. On the one hand, it's nice to see someone else publicly say, yeah, we think this thing can go higher from here. On the other hand, that 145 target is basically a call for the stock to revisit levels it's already touched, not exactly a new galaxy. It's like getting a hype speech that ends with, you can absolutely make it back to where you were last summer. Still, it's one more person to prove wrong on the upside if Hood ever decides to reclaim and then blow past that level. The more cautious the targets are, the more fun it is when the chart decides to ignore them. This past week and weekend, a few members of the Robinhood leadership team did what Robinhood leadership does best, turn volatility into personal liquidity. First up, CEO Vlad Tenev converted some of his Class B shares into Class A and then sold a notable chunk of them into the market. The sales landed around some eye-catching price levels, which is a polite way of saying he picked his spots well. Next, CTO Jeffrey Pinner also unloaded a batch of shares, again at some pretty interesting marks on the chart. And to round it out, the CLO followed through on a previously scheduled plan to sell, originally set up back on August 8th. None of this is illegal or even unusual. Executives diversify and execute trading plans all the time. But when you line up the CEO, the CTO, and the CLO all ringing the register while retail is still talking diamond hands, it makes for a very on-brand week for Hood. At this point, I'm just waiting for them to announce a new role for me, CMO, Chief Meme Officer. Let's start with the weekly chart, our medium-term view. We're seeing more red in the sea. This makes 3 straight red candles in a row. If you traded inside the range of this last candle, there was still roughly an $11 swing on the table, but the overall direction has definitely been down with style. The interesting part is what's happening under the hood with the indicators. Stock RSI is bunching up down in the oversold zone, suggesting that the selling pressure might be getting tired even as price keeps grinding lower. It looks ugly at a glance, but this is exactly the kind of setup that can fuel a sharp post-earnings snapback if buyers decide they've had enough. Historically, Hood has had some solid runs after earnings, so for me this starts to look like load the boat at uncomfortable levels and wait, not abandon ship and swim to shore. Zooming into the daily chart, our short-term view. On the daily chart, price finally tagged the 50 EMA and then got smacked right back down, losing about $10 in the process. The last time we did this dance, we were up around the $139 area. So yes, it could absolutely be worse, but it still stings. Right now, it feels like we're waiting for the day when stock RSI and MACD actually line up bullish at the same time and decide to stop trolling us. When that happens, you can easily see a scenario where buyers step in hard, shove price back through the 50 EMA, and start aiming toward those prior highs. Until then, it's a lot of almost signals and daydreaming about the next time Robinhood decides to sprint instead of stumble. Now let's shrink things down to the 4-hour chart, where intraday drama lives. On the 4-hour chart, the 50 EMA is acting like a very stubborn ceiling. We've tagged it about 5 times, and each time price has been pushed back down. The good news is, those rejections are getting less violent. The bounces lower are shrinking, instead of turning into full-on dumps. Pair that with stock RSI curling up and MACD looking ready to cross, and you've got the early ingredients for a short-term rally attempt. Of course, this is Robinhood, so the alternative scenario is that we get the worst of both worlds and just chop sideways while everyone argues about what should have happened instead. Looking at the January 16th options chain, the setup is pretty similar to what we've seen the last few weeks, just with the volume dialed up. The market is pricing in about an $8 implied move, which is Wall Street's way of saying something spicy might happen, but we're not betting on a full meme rerun just yet. On the put side, most of the action is piled up around the $110 strike, with roughly 14.6 thousand contracts. That's a whole crowd of traders either hedging for a drop back toward 110 or quietly manifesting it so they can buy lower. On the call side, there's heavy interest stacked at 120, 125, and even a reach up at 130. That's the just one good week away from another breakout crowd, paying real money to bet that Hood can at least tag the mid-120s again. Personally, if we did spike back to 125 and then revisit 110, I wouldn't be mad at that as a day trade playground. For Hood traders, this week feels like controlled chaos with insider seasoning. You've got a new analyst starting coverage with a modestly bullish target, executives quietly cashing out at interesting levels, a weekly chart that refuses to print a green candle, and an options chain betting on an $8 swing in either direction. Big picture, Robinhood doesn't look like it's falling apart so much as testing everyone's patience. The weekly is bleeding, but oversold. The daily keeps bouncing off the 50 EMA like it's a trampoline with attitude, and the 4-hour is hinting that a short-term rally might finally be loading, or at minimum, some high-quality chop for traders to scalp. If you agree, disagree, or think Hood is just coiling for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below: coffee, memes, or pure denial. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech spy microscope. No guarantees on price targets, but we will provide world-class over analysis and high-quality sarcasm.